Okay, thank you very much for joining us tonight. My name's Nick Watchon and I'm the founder of LNPG, and we've got help from Paul Hilliard and Ben tonight, and Tracy Miller. And again, before we start, I have to, under GDPR rules, if you don't want to be recorded, can you please leave? That's done. Good. So tonight we've got...
See you, Nick.
Sorry?
See you, Nick. I'm off.
He started already.
You're getting heckled.
Being heckled. You wait till you start, Nick. And he's the presenter. He's one of the presenters. Okay. And like I said, just thank you very much for joining us tonight. We've got Roma Finance, and they're going to be talking about, over to you, Paul, in a second, about bridging. Is it bridging as well as lending?
Yeah, it's all things bridging finance, and all different types of uses, and a little bit of view of the marketplace, and also a little bit about what we do and how we can help.
And I like to put people who present at our meetings. So obviously you're going to do a special deal for our members.
We already have that in place. We can talk around that with regards to the
arrangement. Oh, look, back on his back foot straight away. Look at them both. So no, tonight is going to be a great meeting. I'm really looking forward to this because a lot of people are doing bridging. Let's see if we can have a good understanding about bridging. And please stay at the end because there's two big announcements that we're going to be announcing at the end of the meeting on the two next weeks who we've got lined up. So that'd be really good. So I'm going to mute myself, shut up, and I'm going to hand you over to Paul.
Thanks, Nick. Good evening, everyone. Good to see a lot of regulars on the Zoom tonight. If you've ever used Roma, can you put one in the chat box? As it would be interesting to see how many of you have actually used them. And secondly, if you've ever used a bridging facility, can you put a 2 in the chat box, please? Let's see what's happening down here. 2. Well, we've got some people who use bridging. Nobody has used Roma. This is interesting. 2, 2, loads of 2s. Wow, thank you. Oh, Bridget, well done. So at least one of the other people on here have heard of Roma. Now, the reason why LNPG chose a bridging company as a first financial institution to be a partner is because sooner or later, whether you're just starting off or you're an experienced investor, you will run out of money to be able to continue to invest. So let me give you an example. I had an opportunity back in 2016 to buy a 6-bed HMO with a 1-bed bungalow in the back garden. This meant it wasn't a straightforward finance deal, so I was unable to get a mortgage quickly. But instead of walking away from the deal, I decided to use bridging, and the mortgage broker I was using back then recommended Roma for the deal. Despite all the bad things you hear about bridging lenders, when after 6 months the agreed lending period was reached and I still didn't have a mortgage in place, Roma extended their facility to me. When I came to refinance the property last year, I realised that my solicitor hadn't removed the Roma charges. So as it happened, I saw Scott Marshall, who is the founder and MD of Roma, on a Zoom meeting, and asked him live on air if he could help to resolve my issues on the old charges. We spoke the next day and the problems were removed for me. So how many financial institutions act that quickly? So when it came to launching a financial institution for LNPG, I was more than happy to recommend Roma Finance. So it gives me great pleasure to welcome Nick Jones and Ben Lloyd to tell you all about how Roma will be helping LNPG members. Good evening, Nick Jones.
Good evening, Paul. Good evening, everyone. Thanks very much. Me and Ben are delighted to be a part of this as well. So thanks very much for having us. And it's great to see so many people sort of logging in and listening to what Roma Finance and what Bridging Finance can do to help you as well. My position, I've been at the business, I'm commercial director, so I'm very responsible for all new business origination and all marketing. Recently, we've just rebranded, not the name, but the whole look and feel of it as well. So you may have seen the old sort of Roman black and red kind of colouring. We've kind of updated it and modernised it a little bit as well. Ben, would you like to introduce yourself?
Yep. Hi guys. Yeah. So my role in the business is to look after new business inquiries that come in, and also to manage the internal sales team within the business. I've been here with Roma Finance for coming up to 2 years now. The company's grown an awful lot in that short space of time, and we've got huge plans to grow again in the next 12 months.
Cool. Before we go any further, I will apologise. Ben's got a slight problem with his broadband as well, so if he does sort of drop out of screen, the voice will still be there. But we've got a short presentation to talk through. Don't worry. Hopefully, it won't be death by PowerPoint, but we'll certainly do our best to try and make it as interesting as possible. Really, the screen I'm going to share just now. Hopefully, if someone could just give me the thumbs up. I can't see anybody when I'm sharing my screen, so if someone could just shout if they can see it, that'd be great.
Good to go.
Good? Fantastic. Okie doke. So we're just going to sort of talk through a little bit around what bridging finance is, because not everybody may not be aware of the type of finance that it is and some of the uses for it as well. Typically, bridging loans and bridging finance has been around for sort of 40, 50 years. It was actually originally back in the 60s when it first came into the sort of marketplace in property. It was typically bought where people had a chain broken down and they were looking to still move, or they were looking to purchase a property which when they hadn't sold their own. And over the years, over the last sort of 30, 40 years, bridging finance has been used for a whole multitude of different reasons. And, particularly in the sort of 80s, where you could only pretty much get a mortgage on their own home, where you've got things like buy-to-lets. And the buy-to-let market, which started, or should I say it sort of blew up in the sort of mid-80s, it started a different type of finance. So while people were looking to exchange quickly as property prices were going up, and people were looking to get very quick finance in place. And over the years, the sort of chain break has come away, and more uses of bridging finance. And we'll talk around some of the uses a little bit later on. But essentially what a bridging loan is short-term financing, like it says on the screen there. It's used for a short period of time to either secure a property, or whether it be residential or commercial, whilst somebody is arranging more permanent financing to be put in place as well. Typically they are short term, so typically 12 months. They can be shorter. There's no, with most lenders, there's no particular minimum time. You can take it for 2-3 months, etc. But you can have 12 months or sort of 2 years really. And people are using it more in the property market and property investors as well, because not just purchasing the properties, the processing of applications can be done particularly quickly. There are certain insurances that bridging lenders and we take out to cover the sort of title, so you don't need to wait for searches, etc. as well. So there's things that we can do within the process to speed it up, to make bridging a little bit more agile for people who are looking to buy properties particularly quickly, or if they, or for whatever reason, the type of transaction doesn't meet the sort of high street needs as well. The big key is all around exit, because it is 12 months. The lender will always require an understanding of what the exit strategy is, whether that be refinance or whether it be a sale after 12 months, if it's a property developer looking to purchase a property, enhance the property in some way, take away the profit, and obviously, whether it be sell as well. So there's lots of different sort of uses for it as well. Some of the uses on the right-hand side there, unmortgageable properties. Quite often at places like auctions, where you can purchase a property which may not be in a dilapidated state that typical sort of mainstream funders wouldn't be happy with. So maybe it's got no bathroom or no kitchen. It might be land for development, things like that. So there's lots of uses where particular short-term lenders or bridging lenders can certainly look at an application in a particular way that the high streets that don't do, and you'll see in the next sort of few slides when we talk around the sort of last 12 months and what sort of happened. Those opportunities can grow up as well. I must apologize as well. I can't see anything on my right-hand screen because there's a load of faces. So hopefully I'll remember the presentation when we go through it. But moving on, having a look at the sort of bridging market over the last sort of 12 months, really. At Roma Finance, we've been around for 10 years. It's actually our 11th year. We had a big 10-year party planned last year, but unfortunately it got sort of kiboshed as well. Been around for sort of 10, 11 years. The experience of the business, particularly when it comes to bridging, Paul mentioned around Scott Marshall, who's our MD, has been in the market a lot, as long as I have, 20 years in total in specialist lending. We worked together at a previous firm for many years before Scott went on to set up Roma, and I stayed at the previous sort of lender and joined him actually only August last year as well. So it's been a business that's been built on reputation. It's certainly been built on experience, and when it comes to short-term lending, there's no substitute for experience in this type of environment as well. As a business, we have institutionalized funding. So we have funders such as NatWest, RBS. We've got a couple of building societies as well, and we have some smaller private funders as well. So we have a good base. We have 8 steady funding lines that we've had and built up over the last sort of 10 years as well. Exceptional people. You know, we specialize in making sure that the people that work here actually understand the marketplace, actually understand not just, you know, the lending side of things, but actually the challenges that you would come up against within your property projects, whether it be, you know, the types of issues that would grow up on things like, you know, titles and planning and all those kind of things as well. We've actually got 2 or 3 people within the team who are actually are property developers themselves as well, and they work with us both as QSs but also underwriters as well. I think one of the things, particularly for Roma Finance, and I've certainly felt this since joining my previous role, is that we really have a people before property ethos. You know, there's a lot of bridging lenders out there that the first question they'll ask is, what's it worth? What's outstanding? What do they want to borrow? Are you trying to calculate what the loan to value on the deal is and what your exit is? And that's the main thing for them. The first thing we always look at is who the people who are that are applying to us. You know, what's the type of customers? What's their experience? Who are they? And actually having a look at the individual, because ultimately, as we are custodians of our funding lines money, we see the people that we lend to as the custodians of our money as well. And we want to make sure that the people that we're lending to are the right types of people, not just because of the issues that could raise if things go wrong, but actually making sure that if they're good people with good ideas, good concepts, and we can support a lot of this when we talk to a lot of customers as well, is how we can actually get them and help them create wealth for them and their family as well. And that's what we're about. We're very much a family orientated business, working with people who are looking to make money out of property as well, which is not always the case out there as well. But if we have a look at the lending market of bridging, so this is the last sort of 5 years, how bridging has sort of grown over the last sort of 5 years from a lending point of view. And in 2020, given everything that went on, the bridging market still grew nearly £1 billion worth of lending last year. And, you know, talking around how sort of last year went and giving you a bit of a lender's point of view of how that went, I'm sure that everybody went through a very, very difficult time, and lenders were no different to intermediaries or even customers, property landlords as well. So, you know, over the last sort of 12 months, I think has been pretty business defining for any business that you've been in as well. You know, I don't think there's a business in the world that had a disaster recovery that included a global pandemic, which shut down businesses, it shut down offices, it stopped people movement, it stopped people actually interacting. I don't think anyone came across that. But what we've seen over the last 12 months, that the bridging market sort of paused. You know, back in Q1 of 2020, when the government shut down all types of obviously interactions, the housing market was put on pause. You know, property buildings, house moves, everything like that. It was a very, very scary time to be in any business. From a point of view of Roma, we paused lending in April for 4 weeks, just so we could take stock of what we saw, what could possibly be happening, have conversations with funders, make sure that we were in the right place. And after a short pause in that marketplace, we came back to lending and haven't looked back since. You know, with the property market closing, lenders took time to assess their position. You know, we were no exception, like I said. And I think that since the pandemic, I think one of the big helps and support to the UK, whether it be to the UK businesses or the economy, was obviously the government came in with a lot of aid with regards to CBILS, the furlough scheme, and obviously the stamp duty tax breaks as well. So from that point of view, the economy's had a real good kickstart. And whilst we have a look at the the stamp duty and the buy-to-let position on that side of things, we've seen a huge increase as the whole of the UK, as properties obviously grown around an average of 8% around the UK. On the back of that, I was, personally, I actually moved house in July last year as well. So, certainly from a point of view from a property position, it's certainly gone up. But there has been other things which have helped this growth around the changes to the permitted development rights, where the conversion from commercial to residential, or the conversion to sort of multi-use, mixed use, should I say, residential and commercial as well, has really grown the opportunity for bridging within that market. These types of lending, particularly around conversions and property refurbishments, is not something that the mainstream lenders are overly keen to get involved in. It is a very pragmatic approach to the types of applications that you get, and a lot of property transactions, a lot of property projects are very individual and unique. So coming to specialists like Roma Finance, and there are other bridging lenders available, is certainly something which I feel that will only continue to grow as well. If we look at the next slide, what we've got here is the breakdown of 2020, where the lending was actually done. You've got residential, commercial, development, and I believe it's second charge. I can't see the right-hand screen, but I think it's second charge. From that point, if you have a look at one of the biggest areas of growth in the last 5 years, from 16 to 20, is around that development area. The growth of nearly 90% worth of lending, where people are using short-term bridging finance, and that's pretty much down to there's still a lack of housing stock within that marketplace as well. There's certainly a lot more people, not just the bigger builders, but there's more people looking to develop residential houses, and look to sort of plug that gap with that sort of market stock as well. The other side of it is the commercial marketplace. So if you have a look at 2016, 2020, from 1.6 billion to 2.2 billion over the last 4 years, that's not one of the biggest growth areas. But I think that given the way that businesses and commercial real estate is right now, and that sort of juxtaposition where we are with people wanting to work more from home or be more flexible, I think I can see that sort of commercial sort of property angle. The property prices are certainly leveling, if not sort of not looking to decrease, not certainly growing in the same way that the residential side has as well. So, with the changes to things like the permitted development rights, which I mentioned before, we can possibly see a potential area of opportunity here with commercial real estate looking to change from being commercial to maybe being mixed use. There might be some commercial, maybe some residential conversion of commercial property into apartments. We're seeing this quite a lot in the type of transactions that we're getting, whether that be sort of city centres or town centres, and it's a very interesting view of what the future of the town centre and city centre could look like. Obviously from the last sort of 12 months, fewer people have been going into town centres. We're obviously seeing the high street being hit with some of the bigger brands out there, like the likes of Debenhams, and obviously there's places like John Lewis, which have announced closures as well. What are those units going to be? What could they be changed to? And that's the opportunity of bridging, because it is flexible product. It can consider different ways of working. It's not as straightforward as some of the mainstream lending out there as well, and certainly taking advantage of short-term bridging finance is a way of that conversion being a mechanism between obviously purchasing it and part of a profit and loss of a project. It's just purely like cost, like bricks, like labor. It is just a purely part of a bricks and mortar of a profit and loss as well. But as we look into the future a little bit, this is going from 2021 to 2025. You'll see what we're sort of talking around, where that market goes to. So from that point, the growth of sort of bridging finance predicted up nearly 40%, up from 9.79 billion to 13.7 billion worth of lending. And the reason why this is because there is opportunity out there which is not being served by the mainstream lenders. So people, if they're wanting to convert property, to develop property, to purchase property quickly, if you have a look at the last the last sort of 12 months with regards to buy-to-lets, people are buying buy-to-lets on bridging loans because the process is slowing up considerably. I'm sure that if anyone is buying properties in the buy-to-let market at the moment, that sort of whole slowing down of the whole process going through, because people are working from home. There are firms which are solicitors which are working from home. You've got things like council searches and things. People are all working from home, so things are slowing down. So actually using a bridging lender to purchase buy-to-let properties, or to look to convert them and raise finance to secure the asset before the stamp duty sort of tax break is removed is certainly one that people are looking at as well. But having a look at this, what we were talking about before is that commercial section there. So what's predicted, and this comes from a company called Mintel, and they offer reports which will have a look at what currently going on in the economy, what the predictions are, how it's been sort of future worked. From that side of things as well. So from this point of view, that commercial opportunity, they're predicting up to 2025 going up to £4 billion from 2.6. And a lot of this is to do with that sort of conversion that we were sort of talking around about city centres, people actually diversifying their portfolios and coming away from residential and actually looking at, expanding into a commercial real estate business as well, and actually having a look at what the opportunities are within there. If you walk down most town centres, city centres at the moment, there is a lot of mixed use buildings which are out there, where you've got a coffee shop below with 2 or 3 apartments above, etc. as well. And I think that as people move back from an urbanized area back into city centres, there is going to be more demand for these types of shops, etc. I think that the days of sort of every retail unit having every retail business having a shop or a shop front may disappear, but certainly the property will still be there, and what that future will look like is very interesting as well. But certainly commercial is a big opportunity. If you have a look on the purple one on the left hand side, residential 2.35 to 2.74, that's the sort of regulated sort of side of things. But actually looking still at the development side of things, there's still 26% growth in development. There's still that shortage of housing stock, which still continues and will still continue to be a part of that. We are an economy in the UK which is based off housing market. Retail and services is our main win there. So that sort of confidence in the housing market still keeps that drive as well. And we are a nation of homeowners, of course, which is a fabulous thing. It keeps that housing market and the economy going as well. So just a few glimpses into the future here. So take uses of bridging finance over the last sort of couple of years. It would help if the colours on these graphs would be the actual same. So I'll point out a couple of places for you. The first one being the 22% on the right hand side, which is the purchase was actually for refurbishment, where in 2019. Only 13% of the bridging taken out was for refurb, and I think that we're seeing an awful lot more of this as well, as people are looking to use short-term finance to. There's different types of refurbishment finance you can use. There's light, there's medium, and there's heavy. I'm sure Ben can talk our interpretation. But what we mean by refurbishment is, if somebody is purchasing a property at an auction, and you might be just putting a new kitchen, new bathroom, decorating it, sticking it back on the market, or keeping it in your portfolio and renting it out from there. You've got medium refurbishments, where you're looking at sort of nearly 100% of the purchase price. You might be restructuring the property in some way, knocking down internal walls, it might be extending, whatever it might be as well. All of these are available that we can do. through the bridging finance. And then you've got heavy refurbishments as well. Typically, your heavy refurbishment will be more than 100% of purchase. So that might be things like converting commercial to residential. It might be, stripping back the entire property back to brick walls and then rebuilding, restructuring the entire property as well. But we've certainly seen a growth this year in refurbishment. The down, or the one that's taken the biggest hit on the left-hand side, 2019 investment purchase, bridging finance was its biggest use, 23%, which is down to 11% in 2020. I don't think that's surprising. I think that given the pandemic that we've gone through, and no one's mentioned, well, there's only been me talking, but no one's mentioned the B word of Brexit. That's obviously, had its taken its toll a little bit, people being a little bit more apprehensive around what that's going to bring to the UK as well. But I'm not surprised that investment purchases has sort of dropped in 2020. I think fewer people have actually invested, and what they've looked to do in 2020 is actually refurb their properties, because one of the other things that you've got to bear in mind is obviously over the last sort of 3 or 4 years that buy to let, I'm sure that you're all been a part of that, is the tax position on the buy to lets as well. So actually things are less easier now to, or should I say, things are less, the rate of investment is less on buy-to-lets these days than they have been over the years. Obviously, the different changes in the tax position around gross and net, etc. So people are looking to create more wealth from the properties that they've got. So where it may have been a 5-bed property before has actually been changed into a 7-bed HMO, and they've used that money to refurb as opposed to just invest in a new one as well. So I can certainly see a couple of the reasons where these have changed. But having a look down this list here, there's lots of different ways and different uses of bridging as well. So business purposes, unregulated auction purchases. There's obviously regulated finance as well for people looking to raise money on a regulated property as well. So
now
just
you need to come up for air there, Nick. Please. I didn't see you breathe. I'm going to ask Ben, because there's loads of questions coming up. Ben,
is there? I can't see. I'm really sorry.
There's a few questions to kick things off.
I don't think there's a few. There's a bloody lot.
That's manageable.
Okay.
Yeah, so a few people have asked about this. Do Roma offer LMPG members special deals? And do Roma offer development finance in Scotland?
Okay, Ben?
Yes, we do. Yeah. So for members of LMPG, typically an arrangement fee would be 2%. We can provide a discount to LMPG members for 1.25%. And with regards to lending in Scotland, we lend in England, Scotland and Wales. So there's no postcode restrictions in our lending. Scotland's an area that is becoming very popular for developments, and something we've done a lot of recently. So absolutely, we're looking to do a lot more development in Scotland.
Okay, got
in
one
fact,
here.
Just adding on to that. Sorry, Ben. Just adding on to that. One of the developments that we've just done was a passive house development, which is a very green efficiency development up in Scotland. It was the first passive house development that we did in Scotland. It was a completion of 3 properties.
You've lost him.
You've muted yourself, Nick.
It's the only way to shut him up, I think.
Yeah, good. So why he's doing that? Yeah, right. While you're trying to get your thoughts back, is it economical? Members asked, is it economical to take out a small bridging loan to finish off of development that are the one-off fees for a 20% loan to value, 50 to 100,000?
There's a couple of questions there, I think, isn't there? So if we start with the first one about is it economical to take a small loan? Was that right?
Yeah. To finish
I think
off
I think if time is of the essence, that they're being pushed to maybe on an existing facility, for example, and they're going to overrun the term and incur extension fees and things like that, maybe then definitely a developer exit loan may be well worth looking at, which can be provided between 3 and 12 months that could help you sort of exit that loan if you need to, or wait for that property to be sold. Yeah.
Okay. And what is a 20% loan to value between 50 to 100,000? What is your one-off fees? Somebody's asked.
The one-off fees. So the fee for an LMPG member will be 1.25% for an arrangement fee, and then typically you're looking about a rate of 0.65.
How long does it take to get a decision?
A decision. So we can provide an agreement in principle within an hour, and obviously that will be subject to valuation and underwriting requirements. But as long as we've got a good understanding of the project and the experience of the customer, and what it is they're looking to build, and what the exit will be, as Nick mentioned before, then we can send out an agreement in principle within an hour.
There's a few more questions that came in before the webinar via email. So one of them is, what is Roma's USP that would encourage LMPG members to choose you over any alternatives?
So I'd take that one, Ben.
Of course you can.
There is a slide in this deck, which I will hopefully go to, which should hopefully give you an understanding. That was just some stuff, some key trends I think we've gone on. This slide here, for me, gives the USP over any other bridging lender. Everybody will claim that they're the fastest. Everyone will claim they're most flexible. Everybody will claim that they can do it quicker than anyone else, or they're the cheapest. This one statement here for me from our managing director over the last 12 months in COVID sums up our biggest USP. Not one customer. We had 62. Let me just hang on. Sorry. Yes, we had 62 customers out of our back book that were affected by COVID. Now that might be the site was stopped, they ran over, business materials, all of that. There were 62 customers who were affected by COVID. And of those 62, every single one of them were offered a fee-free COVID extension. And of those 62, 56 have now successfully redeemed with no additional costs to their business or to that project as well. So for me, I could sit here and say all of the things which every other lender could say and say, listen, you know, we're the quickest, we're the best, we've got the slickest solicitors, we've got the most flexible criteria, we're the cheapest, we go to the highest LTVs. All of those things, very much proof is in the pudding. But for me, that is the one thing which I think is our biggest USP. The culture within our business to do the right thing by the customers who want to work with a lender, to build a relationship, not just on the day one. And, you know, we can talk around choosing a lender moving forward, but from a point of view of choosing a lender that's going to be with you for the full term, for the full 12 months or 2 years of that particular project, that you know that if something happens and you're open, you can engage and you talk about it, there is an opportunity to solutionize any problem that comes up. I hope that answers your question.
Yes, definitely. That answers it more than enough. Just one more before we carry on with things. So this was a question that came in via email too. It says, how do I get funding for future purchases of properties? I've flipped 6 properties so far and only been able to purchase the next property once I've received the money from selling the current one. So it then says, I'm 64 years old and don't have any income. I only have around £200,000 in cash for investment. How can I borrow finance? Okay,
that's a good question. So for us at Roma, we don't actually have any minimum income requirements, which is quite unique. And I think that providing the customer has the funds for a deposit, then we can help with the rest of the purchase and works, which I'll come on to in a slide further down the line. But yeah, I think, you know, if they have the funds for the deposit, we can provide the rest.
Okay, and some people didn't quite hear your rates, the discount on the arrangement fee that came in.
So the discount, so instead of being a standard rate of 2%, the discounted rate for LMPG members is 1.25%.
Okay, good.
Okay.
And the other question is a good question. This is, do you need, what experience do you require? Development. Yeah, so say this is my first development. A lot of lenders are pushing back saying you don't have any experience.
Yeah.
Yes, that's a good question. It's so when a customer is looking at doing a development for the first time, we'd obviously well, we meet every borrower as well, which helps us a lot to understand their reasoning behind their doing a project like that, for example. But we'd also do or ask a lot of questions about the team that they have behind them. You know, their power team, who's doing the building, who's involved in making, you know, have they got a project manager? Are they doing it themselves? Have they got somebody that's looking after the planning? Have they got an architect that supplied the right drawings, the right building regulations? So it's about understanding if the customer's done their due diligence as well on the property and the project, and really looking at that, the support team behind that person that's helping them.
Yeah, just to add on that, Ben's absolutely spot on there as well. It's not just about experience. Going back to the very first slide, if you can remember, before I wobbled on about what's happened over the last 12 months, but we have a people before property ethos. So it's not just about what's the LTV. You've got no experience, no thanks. It's about who you are as an individual, what opportunities have you got, and from that point, it's the team around you that you may not have had anything yourself, but if that team around you is supportive, then absolutely, like Ben says, there's always an opportunity. It's not just about experience or one thing. We look at the whole picture.
I think you've answered this question, but another question's come in. It's saying, can I have a loan from you for 2 years? I'm 53. I've got a pension. I've got 120k. You don't necessarily require an income. Is that correct from what I've just heard you say before?
Yeah, we don't have any minimum income requirements for most of the products, you know, and a lot of the circumstances, the interest is deducted from the initial loan, so there's no monthly payments required.
Okay.
Yeah.
There's one more question. Do you do post-development finance, i.e. to take out the development finance provider whilst the properties are sold?
Yep.
Yes, we do. Yeah, we can.
Sorry, Ben. Sorry.
Fine.
Okay. I suggest you've had a break now. You can get on with you and come up for air.
Okay. Eyes down, looking in. So, you know, what to look for in a lender. You know, I think, you know, we've made the point, and I won't harp on around that, but, you know, making sure that you pick a lender, whether it be ourselves, whether it be somebody else, but what certainly things to look for is obviously the size of the company. You know, this is a project that's going to go on for 12 months, 18 months. And as we've all realized in the last 12 months, that can be an awful lot can go on in 12 months as well. So picking the right partner that has, sort of sustainable funding lines. How long have they been trading? You know, what are the background of the owners? Who are they? How are they funded as well? There's lots of different ways that bridging lenders can be funded. We won't go into it now, but there's things like peer-to-peer, there's banks and build size, is it high net worth, is it private equity, is it individuals? There's all these different types of ways that lenders can be funded. Do your research. Obviously, the beauty of the information superhighway of the web out there, a lot of these answers can be done, but make sure that certainly what you're looking to do is pick a lender that's got your intentions at heart as well, because it's not just around how much money you can make. It's about, for ourselves, it's about repeat business. It's about growing something and helping customers build wealth for them and their families as well through property. A little bit top tips: build a relationship. We talked around, lending is can be quite black and white, and as you go into that sort of high street and the sort of computer says yes, no, you become a number, you become an account number. Building a relationship with a lender is a really, really key thing, because we've had customers that have come to us and we've done 6, 7, 8 different projects for them, and you build up a reputation. So suddenly, things like obtaining finance quicker, pushing boundaries on loan amounts and LTVs. If you've got history, build that relationship with that lender up as well. But the most important one is keep the communication lines open. If there's a problem, let the lender know as well, because with the right lender, they'll work with you, because ultimately, we want to make sure that if there is a problem, how can we help? How can we assist? Because, our money is tied up in that project as well. So we want to make sure that we come out with the best outcomes for you, your project, and for the lender as well. So I will gladly hand over to Ben now, who will talk through a little bit more, and we'll try and do this in a less COVID update where he says, next slide, please, every 5 minutes. I'll try and predict that. Okay, over to you, Ben.
Thanks, Nick. So we'll cover some of the products that we have at Roma. Obviously, we're not just a bridging lender. Obviously, with the information Nick's provided, we can provide development finance, and we have a 5-year mortgage product available for things like buy-to-lets, HMOs, and holiday lets. So if we can move on to the next one, please, Nick. We'll start with residential short-term lending, or standard bridging. So this is where customers would typically use bridging finance to purchase a property, to refinance a property, and maybe use some funds to refurbish the property for auction purchases, for example, and that really require quick completion, especially if it's through auction. Typically these terms would be from 3 to 12 months, with an average being about 9 months, I would say, at the moment. And we can lend up to 75% loan to value for these types of properties. So whether that be residential, mixed use with a HMO, semi-commercial and commercial properties, we can provide standard bridging for all of those reasons, really. So again, as I mentioned before, there's no postcode restrictions. We lend in England, Wales and Scotland, with loans from 75,000 to 3 million. There's two great things about this product that we have. One of them being that we can not only provide funds for the purchase of the property, but if the needs be that the property needs refurbing, that we can also provide funds for the refurbishment as well, which is quite unique in the industry. As Nick mentioned before, we can provide funds for light refurbs, medium refurbs and heavy refurbs. And how we differentiate between those 3 types of refurbishment, hopefully is quite simple. So if the cost of works are up to 50% of the value of the property, we will class that as a light refurb. If the cost of works are between 50% and 100% of the price of the property, that would be classed as medium. And if the cost of works outweigh the price of the property, then that would be deemed heavy refurb. So not only can we provide funds for the purchase, but we can also provide funds for the works as well, which is really useful for a lot of customers. And the second thing as well is that we have a bridge to term option available. So obviously one of the main questions at the start of the process is, what is your exit? How are you going to repay that loan? We can actually provide that solution for many different reasons. So for example, if you purchase a property at auction and you spend £50,000 on a refurb, maybe adding an extra bedroom, something like that, we can then exit you onto another term product, so a 5-year mortgage at that higher end value, which allows you to repay the Roma loan, but then give you the funds to go and do your next project. And that's what a lot of customers are doing at the moment. It's a customer for life proposition that we sort of have at the moment that is really useful to allow customers to start to build a steady portfolio. Is there any questions on the standard bridging?
We do have one. What are the exit fees?
So exit fees, there are none on standard bridging. So standard bridging and refurbishment finance, there's no exit fees.
Okay.
There's a few more questions that we have whilst we're on here.
Absolutely, yeah.
So one of them is, let me find it. Hang on, sorry.
Shall I jump in while you're looking for that?
So can LPG members go directly to Roma, or does it have to be through a broker?
Yeah, there's 2 ways of answering it. So the discounted rate is for when customers will obviously make an inquiry direct to the business. More than happy to be able to accept your application via a broker as well. Obviously, they can give you whole of market advice, but the discounted rate would be for customers that would come direct.
Okay, and another one that we just got through is, can bridging be a cost-effective way to get around the 6-month remortgage limitation?
It can. Well, if a customer, so I mentioned the bridge to term proposition there. So if a customer is to use our mortgage product to exit the loan, then there would be no need to own that property for 6 months. There's no 6 month rule with that. So there's no reason why customer couldn't buy property at auction, do a quick refurb within 3 months, and switch it to that term product on that higher value to then go again.
Is it possible to give an example of what the typical rate is on the bridge term percentage for the mortgage?
Yeah, so the rates start from 4.89%. I've got a slide in coming up to highlight some of the headline figures for that, Paul.
Just one more thing about what's on the slide here is that people are asking, what is the advanced auction solution, £30?
So to help with the speed of some of the completions that's required, especially at auction, we can provide a desktop valuation, which will give us a confidence score to confidently quote or provide the customer with a figure they can go to an auction with of the top line figure we would be able to provide a loan for.
And that's obviously important because it gives them an indication of what their top price is going to be, doesn't it?
Absolutely, yeah.
It means that they can confidently bid in the room, knowing that they've got that finance pre-approved.
Yeah, as long as they don't go over that agreed limit.
So is £75,000 the minimum available?
That's the minimum loan. Yeah.
So you won't do 50,000; it was 75,000.
What we can, the minimum total facility is 75. So if, let's say, for example, you were looking to medium refurb a property at £75,000, but you only wanted 50 of that day one, then you could do that and take 50 day one and have the further 25 and a further drawdown. But the minimum loan total facility is £75,000. Yeah.
Okay. Okay. Oh, someone's saying it was 100,000, but has it previously, have you dropped that down?
It was actually increased. Actually, the minimum was 50,000.
Okay, I'll shut up.
Maybe it was development. The minimum development is 100.
Oh, right.
So the development finance or ground up finance, it's hugely popular at the moment, as Nick highlighted with those slides before. Where a customer might purchase or own outright a land with planning, so planning must be approved, then we can help with either funding the purchase and 100% of the work. So if the customer needs help with the purchase, then we'd look at 50% loan to value day one, but 100% of the build costs released in arrears. So you'd have to have a bit of working capital at the start to start the build, and then we'd reimburse you in stages once the monitoring surveyors come out to check the works, check the invoices, and then we can reimburse you so that you can then go on and continue with the build. If the property is owned outright, then we can forward fund that, which enables you to then go and progress with the build as and when you need to. So there's no restrictions with that. It's a really flexible product that we have. So there's no, we don't dictate when the drawdowns must happen, or there's no penalties for non-utilization of funds. So it's really flexible way of looking at of building a property up to 6 properties, really.
Yeah. I mean, there's loads of questions. Like one question I've got here is, can I bridge while I'm remortgaging, or I sell? I take it that is going to be short term. Yes, you can. You can bridge for anything. It doesn't. There's no. Is there a minimum time you can have on a bridge with you?
The minimum term is 3 months.
Yeah.
What I would say, to give peace of mind, especially with COVID at the moment, that there'd be no real reason why you couldn't extend that to 6 months. And if it was repaid in 3, you'd get 3 months back on your redemption statement. So it wouldn't actually cost you more, but you obviously got a little bit of time there should anything go wrong with the sale.
Yeah, and I'd just add to that as well, Nick, that you know, as what we're seeing at the moment, and speaking to a lot of the solicitors that we work with as well, things are taking longer to go through, and I'm sure that a lot of the people who are joining us today, if they've got property purchases going through as well, that time frame of conveyancing, going from, you know, agreeing the sale right through to completion is certainly elongated in the last sort of 12 months with you know, with a lot of solicitors and valuers and people like that as well, certainly restricted in their working days as well. So I would certainly urge anyone that if they're looking to take out a bridging loan, then have a look at, obviously, because the figures, the numbers do matter. Obviously, the longer you take it out, etc. as well. But, you know, giving yourself that extra bit of time in the current climate, especially with the stamp duty tax break, and, you know, speaking to a few solicitors, things are certainly taking what ordinarily have been sort of 12 weeks sort of conveyancing up to sort of 16, 18, 20 weeks now. So yeah, I think I saw a stat somewhere that said that the average house to putting it on the market to actually physically moving is nearly up to 280 odd days now. So yeah, so things are certainly elongating on that as well. So give yourself time.
No, I
I mentioned about this a product being flexible. One of the good things about it, you only charged interest on the day one amount, not the total facility on day one. So you only charged interest on what you borrow when you borrow it. If you don't use it all, you're not charged interest. And you know, if you take out a loan for 18 months and complete it in 15, then you'd be given a discount on redemption statement.
Yeah.
I have another question. How are the fees and interest paid? Are they upfront and ongoing, or added to the overall redemption total?
So usually they're deducted from the start of the loan, so they're taken out of the gross loan. So there's no monthly payments. And then with development finance, that only happens on the day one facility. So if you see a piece of land for 100,000, we'll provide 50,000 day one. You'll only be charged on the interest on the 50,000. The rest of the funds that we provide for the works are rolled up at the end of the project once it's finished.
Just on that point, for development finance, what is the maximum LTC percentage?
The loan to cost is 90%. The way that we work or look at how much we can provide to a borrower is based upon the gross development value, the GDV. So our loan to GDV is 65%. So if a land we're planning to build 6 houses is worth £1 million gross development value, we'll end up to £650,000 for the purchase and for the works.
Okay, thank you. We've got a few more questions, but we'll come back to them and just move forward the presentation for now.
Yeah, I did understand Martin Moore's question, so that'll be a good one to come back. Start with that one, Ben.
Yeah, we'll come back to that one, but yeah, we'll go on the presentation.
Thank you.
Okay. The other products, as I mentioned, we have is our buy-to-let or our term products. So we've got a 5-year term product, which provides funds for buy-to-lets, HMOs, holiday lets, and service accommodation now, which probably we launched about 18 months ago. If we do the original bridge, then we can allow LTVs up to 75% loan to value. If it's a property that's going straight onto the term, then it'll be more than likely 70% loan to value. As I mentioned before, rates start from 4.89%. And it's again a really flexible product. There's no minimum income requirements. There's no minimum ownership period. If it's a HMO, we can allow top slicing. So if only, for example, 3 of the 4 rooms are let out, then we can allow the customer to use income from elsewhere to make up that rental coverage. And again, this is available in England and Wales only for now.
Yeah, just on that as well. What Ben was talking around there, he touched on a customer for life proposition is what we've got. So from a ground up development, building the properties, obviously as soon as they're wind and watertight, looking to develop or exit onto a bridging loan, and then from that point when they're wind and watertight, all fixtures and fittings done. You can either then flip it onto a 5-year term product. So not only have you bought the ground, built the houses, turned them into buy-to-lets, kept them in your portfolio, you can also refinance as well. So all within a very safe environment, working with one particular lender. And that's something that's, again, very unique to ourselves as well.
On that point as well, it provides consistency in the decision making. So the valuer that obviously did the bridge will be the same value that then goes out to provide the valuation for the term. We can provide things like dual representation at that point, so there's a cheaper and a quicker legal process, which should ensure that we can switch you from a bridge to a term within 3 to 4 weeks. You just need things like your gas, electric, safety certificates, tenancy agreements, proof of rent deposit, things like that, really, because we know the borrower and the property from the bridge. It allows us to move at pace. So these are just a couple of case studies just to show you some of the properties and conversions that you can do with bridging finance. This one was commercial to residential, which again, the slides highlighted before, is going to be something that's really popular in the next 4 to 5 years. This was actually a funeral parlour split over 3 properties, which 2 guys we know very well purchased. Nick was telling me before, when we actually went out to do the borrower meeting with this one and take some pictures of the property, if we look at the before picture here, the property in the background is actually a police station. And once they got wind of somebody taking pictures of the property, they quickly come out to ask a few questions, which in hindsight, well, looking back at it now, was quite funny, but at the time wasn't for the representative of Roma. So yeah, commercial to resi, there's going to be lots of repurposing commercial properties, certainly in the next 12 months. And that just gives you a flavour of the type of project you can do. With this one, so this is land with planning, and again, these customers unfortunately were let down by a tier 1 lender during COVID. We were able to step in, very experienced builders and previous track record of completing projects like this. So we were able to step in, provide the funds they needed to get those properties to a wind and watertight stage, and then put them on a development exit product to complete the properties, and they're in the process of being sold now. So this one, again, hugely popular, barn conversions, lots of these popping up at the moment. We provided funds to help purchase the site and 100% of the works to get that property completed. What helped with this one, obviously, where Nick mentioned before about some lenders looking at the actual property to make their decisions on, you can see here it's a bit of a shell of a property. However, the customer had a pre-approved exit with a lender, which gave us a lot of security that we would be able to exit the loan comfortably. So yeah, questions. If anyone's got any questions, then by all means, you can give us a call and drop us a line by email. Happy to answer questions on bridging. If it's something that you're looking at in the next 12 months, by all means, send us an email over and I'll get back to you.
Okay, we've got a few questions live on Zoom. So going back to Martin Moore's one, he's asked, can Roma pay 100% of PP of my next investment property using an existing unencumbered property?
Yes, we can. It's quite common. Obviously, some people don't have the cash to be able to purchase the properties, but they will have equity in their own home where we can take a first or a second charge, or buy-to-let properties in the background that we can use to put into the deal. So yes, we can do 100% of the purchase.
Thank you. Paul has asked, I might have missed this, but do you fund purchase of portfolios?
Yes, we can do. Yeah. There's each case is based on its own merit. So like Nick said before, we're not a tick box lender. We'll take a look at the properties. What they're worth and what the plan is with the funds, and look to find a solution for the customer.
Okay, great. So we've got a few more specific questions here. So one of them is, what is the minimum property value on the buy to let?
Minimum property value is 100,000.
Yeah, it's a few more. So one of them is, hi, do you lend on holiday lets for a person without a mortgage?
Do we lend on?
Holiday lets for a person without a mortgage.
Does that mean is a first-time buyer, first-time landlord? So obviously doesn't own their own property, but looking to buy a holiday let as their first property purchase.
I'm not
If that's the case, then yes, we can.
Paul, I don't understand the question. Where's the question? I can't see it.
It's the one at the bottom.
So we do lend on holiday lets. The property mustn't be restricted to just a holiday let. So as long as that property can be switched to a buy to let, then we can lend on that. Obviously, you know, they're going to be hugely popular, certainly over the next 12 to 24 months. A lot of staycations, and we've already seen a massive increase in people buying properties on coastal, on the coastline to obviously use as holiday lets. But as long as, you know, they can be switched to a buy to let at any point, then we're happy to lend on those.
Yeah. Somebody's asked a very specific question here. They're going to have to contact you because they're asking you, the arrangement fee of 1.5, but what is the broker fee and the lender's legal fees for LMPG members?
Yeah, if you want to send an email to me, I'm happy to get back to you with a specific quote, a full breakdown of costs.
Yeah. Can you put your email in the box of the list of questions so people can come straight back to you, Ben, on that one?
Yeah, of course. Yeah, I'll put my email address in. Yeah, no worries. Yeah.
Put your email request and your contact details. Yeah.
Yeah.
Just another question here. So it says 100% purchase price using unencumbered property, but do you still need to pay a 25% deposit?
No, so we can lend up to 100% of the purchase price with cross-charging on multiple properties. So let's say, for example, you had two customers, or you had a customer who owned a £100,000 property or a £200,000 property looking to buy another £100,000 property. We could lend £100,000 on the £200,000 property, and then as long as we took the cross-charge against both, we would be happy to do 100% purchase.
Okay, thank you. And just another one here. So it's more specific again. This is, if a property is purchased for cash for development to turn it into a HMO, what percentage development finance do you provide? Also, did I see your bridge to term loans are not applicable for a HMO, which is 9 rooms and over?
Just on the last question there, that each case is based on its own merit. We have done projects or HMOs over 8 bedrooms. I think it just depends on a mixture of things. I think density in the area and things like that, really. But we, again, we're very flexible in the decisions that we make. And on that as well, we have a dedicated underwriting service. So once you go through the application process and you eventually get to that underwriting stage, it's one person, one underwriter that you'll have direct contact with that's making those decisions, which is a really good feature to have.
Roger Lancaster asked a great question, and I didn't even think of this one. You say it's important about having what team and working out the cost of the refurb and or the new build cost. Yep. The finance. Roger Lancaster saying we've got access, LMPG members have got access to Jewson's Aviator, where they work out the total cost of the rebuild or the build. Will you use that as an estimate of to do the work?
I think something like that would really help, wouldn't it? Costings, schedule of works, with timelines are really important, and a key piece of the underwriting sort of requirements, really, to understand if everything's been factored into the schedule of work. Sometimes things can get overlooked and missed. If you use an application like that, then it's going to obviously solidify your schedule of works and what needs doing. So something like that would help, but we'd still need to see the details of other parties within that power.
Yeah, of course, no, but the first port of call would be the total costs, the timelines, etc. So
absolutely,
yeah, that would be good. Okay, that's a good question from Roger.
Yeah, Bernard
Roger.
was asking if Roma provide funding for purchasing holiday lodges, but he also says mortgages aren't possible. So I think that means that he can't remortgage afterwards. So presumably he'd need to prove his exit on that.
Yeah, I suppose as I mentioned before, it's difficult if the restrictions are for that property just to be a holiday let. You're limited to which lender can help exit that loan. If the property can switch back to a standard buy-to-let or HMO, then there's going to be a lot more comfortable options for the customer.
Yeah.
And another question on Zoom, sorry. How do Roma take into account an element of private investor funds within a development finance loan?
Well, I suppose this happens a lot, if I'm really honest with you. A lot of people use private investors to help with the cost to purchase the property. And obviously it's part of the underwriting process to find out a little bit about the background of those, and are they expecting a charge on the property, for example, because we would have to have the first charge. Do they have an investment an interest in that property? Are they looking to take a second charge in the property? What are they charging the customer? Has that been factored into the costs and the contingency that customers might have?
Okay, thank you. This is a really important question. This is, do you provide finance for limited companies as well as individuals?
Yes, we do. Yeah, both. It's whether it's a personal application or a limited company, we can take a look at both. If it's going to be a limited company that make the application, we just ask for a little bit more information front end. So last 3 months. Bank statements for the limited company. A lot of customers actually set up a limited company for the purpose of this
an SPV
transaction. Yeah, so it's a new SPV. So we can look at both. Yeah.
Okay, thank you. Does anyone else have any questions they'd like to add? I think I've gone through most of Zoom now.
So Ron's asked a couple of times, is there an age limit?
No, there's no age limit.
It bloody better not be. Otherwise, I'm going home. Yeah. Looking at some of these pictures, yeah, we're getting on in our age.
Yeah, no, there's no age limit.
Okay, great. All right. Any other questions for anybody? Because they're here, please ask. Okay, good. All right, that's it then. So thank you very much, Nick and Ben. Okay, and please put your email up on the chat. Yeah, so people can come back to you directly. And I do thank you so much coming on tonight and doing your presentation. I do apologise to members that you had to listen to me, Ben, Tracy and Paul asking the questions. You can really tell the professional Anthony's not here. Anthony's doing a project for LMPG and he's just up to here with it. So he's in the background, but you had the amateurs on today, me asking stupid questions and Tracy and Paul and Ben. But thank you very much for bearing with us. One of the things I would like to say is we've got 2 more webinars for this series, and I would like to say that people have asked and hopefully we're going to deliver. People have said, oh, Nick, when are you going to get American Express coming on? We've got American Express coming on and they'll be being part of the LMPG partners. I think it's April the 19th they're coming on, but they're going to be doing a pre-webinar on telling you members what they're going to be offering you. So that's really quite exciting. And also what we've got is I've asked Simon Zucci on the following Wednesday to do a talk to us. And I said, Simon, I said, what I want to know and what members would love to know is not just about your successes and selling training courses, because that's a big part of PIN. And I'm a great believer in people doing training courses. I don't run training courses, but I want to know how he got there. I want to know how he failed, where he failed, how did he get up, what made him get up when things were hard. Yeah. And also share with us his success stories. So he's never done this talk before. He said, so you really, I said, yeah, I want to know warts and all. So he said, that could go on a bit. So it won't be an hour conversation. It'll probably be about an hour and a half from Simon Zucchi asking questions and how hard business is. Because I think some people don't understand how difficult sometimes and what support we all need. It's easy to criticize, easy to put people down, but what I try to do on our Facebook and as a community is to support each other, help each other. We're not always going to get it right. And I just think it's a really exciting opportunity to everybody as we come out of COVID. And I always say, people don't realize the spirit of people that if we work and come together, we can achieve absolutely anything. So I'm really delighted about that one. So next week we've got American Express, and the week after we got the Simon Zucchi. I am so looking forward to these two talks. Yeah. So all that's left for me to say is really good night and thank you so much for coming on. Thank you. Paul, would you like to finish
Thanks,
off?
everyone.
Thank you for having us, guys.
Yeah, really appreciate it. And
Hope you enjoyed it.
speak soon.
Yeah, thanks, guys. Good to see you. Thanks, everyone. Good night.
Bye.